We are live now.
Good evening, everyone. We will wait for 1-2 minutes for others to join. So please be online for 2 minutes, please. Shafiq, can we start?
Yeah, you can start now. Yeah.
Speaker of today's evening, past chairman, sponsors, representatives, invited guests, professional colleagues, committee members at ICA Abu Dhabi chapter. Ladies and gentlemen, good evening, everyone. It gives me great pleasure to welcome you all to today's webinar on global investment opportunities post-US election series. We had a great session yesterday, and we are enriched with a lot of insight on global market by Mr. Yogesh. Today we have second session by Yogesh on how to navigate market post-US election with relevant trading approach and strategies. As you are aware that 32nd Annual International Seminar is scheduled to be held on 19th, 20th and 21st November 2020 with the theme Adapt, Embrace and Lead, the Essence of Success. This year, we'll be conducting the annual international seminar virtually, and we are bringing together more than 24 speakers. Due to COVID, the challenges before us were enormous. You name anything, there was a challenge because we have to do everything differently compared to the previous year. Creative innovation was the only solution. The committee wholeheartedly taken all efforts to adapt and embrace to the current situation with creative ideas to overcome these challenges. Some of the members attending today have registered for the annual international seminar. We request every member to kindly register and encourage your friend who is also a member to register as well. The fees for the member is AED 150 plus VAT. You are also encouraged to your friend to register by paying AED 250 dirhams plus VAT. For the registered participants, we are giving a discount voucher worth more than 1,000 dirhams. These vouchers are limited and will be issued on a first come, first served basis. So please register as soon as possible. This year, we have renowned personalities who have agreed to speak during the annual seminar. Day one, we have His Excellency Pawan Kapoor, Ambassador of India to UAE, Sri Atul Kumar Gupta, ICA President, His Excellency Gajendra Singh Shekhawat, Minister of Jal Shakti, Government of India, Mr. Raja Krishnamurthy, Congressman, US House of Representatives, CA Sanjeev Mehta, Chairman and MD of Hindustan Unilever Limited. At 9 p.m., we have a musical concert by Mr. Amit Kumar, playback singer. On day 2, Friday, we have a panel discussion with CA PR Ramesh, past chairman of Deloitte India, CA TN Manoharan, former president ICAI, CA Prafulla Chajat, former president ICAI. Other speakers on day 2 are Mr. Prashant Kumar, MD and CEO of Yes Bank, CA Nihar, Vice President of ICAI, Mr. Sridhar Vembu, founder of Zoho, Mr. Shiv Khera, international best-selling author and a motivational speaker. At the end of the technical session, we'll have a comedy session by Mr. Amit Chandan. Day 3, Saturday, we have Mr. Kochasep Chitlapalli, founder of Vigard Industries, His Excellency Dr. Tariq bin Hindi, ADIO, Mr. Prashant Gade, CEO of Inali, and we have K. Dinesh, co-founder of Infosys. The technical session of the annual seminar will be concluded with a stock market event. We have a panel this year, a great team of experts. CA Ramdev Agrawal is a joint managing director of Motilal Oswal Group. Mr. Madhu Khela, founder MK Ventures. CA Pankaj Murarka, founder Renaissance. And Mr. Nikunj Dalmia, managing editor of ET Now, will moderate the stock market session. After the stock market, we have a session by Mr. Dr. Kumar Vishwas. So please register for this annual seminar. We are putting so much efforts behind it. Please appreciate that by registering it. Let's make this annual seminar a grand success. I wish a great learning from today's session. I also request everyone to please maintain social distancing, wear a mask whenever you go out of your house. Please follow the guidelines of the government. Please stay safe and healthy. Now I request CA Mohammad Shafiq to play the teaser of annual international seminar. After CA Anu will introduce the speakers. Thank you very much.
The Institute of Chartered Accountants of India, Abu Dhabi Chapter, 32nd Annual International Seminar. Adapt, embrace, lead, conquer the future.
Thank you, John. Good evening, members, and welcome to the second session of the virtual CP series on global investment opportunities post US elections. The feedback from the first session has been amazing, and we hope you will find this session too equally interesting and engaging. Today's session will be handled by Mr. Yogesh Khairajani, who is a global market strategist at Century Financial, a pioneer in global financial investments in the UAE. Yogesh is qualified with international certification of wealth and investment management from CISI and holds a degree in business administration from Indian Institute of Management Sciences, Lucknow. His expertise spans across performance and portfolio management, investments, risk management, financial analysis, and wealth management. Yogesh is passionate about training prospective investors and has conducted over 200 training sessions, seminars, webinars, and workshops. Besides his professional commitment at Century, he also actively manages a trading blog site that talks about investment and trading with a dash of humor. Yogesh is an active writer on Quora and regional publications and loves to travel around the globe. Dear members, please join me in welcoming Mr. Yogesh to the session. Over to you, Mr. Yogesh.
Thank you so much, Mr. Anu, for a great introduction. Just like earlier, can't thank all of you enough for giving me a chance to speak among people with great intellectual capacity. I'm excited to be a part of this group, and thank you so much for receiving me in my last session, and thank you so much for a great response once again. Well, thank you to all of you, to all the panelists. Most welcome to all the members as well. And Mr. John, it's a great video of the seminar. I'm really excited about Mr. Kumar Vishwas. I really wish I could see him and talk to him. But I hope it's going to be a great event. So yes, everybody please participate and go for this session. It looks like amazing. Today's session, we discussed yesterday about the possibility of how the investments can shape up during a Biden government, Joe Biden government, who's a new president of the US. We tried to understand yesterday that why investing in global markets also have its own significance. Today, we are going to be talking about a slightly different thing. Today, we are going to talk about the practicality of it. We are going to understand how you actually take a trade in global markets, what kind of factors you can look into. We will also talk about some sectoral investing, which are the sectors which are doing good at this current point, how different stages of economy actually tells us that which sector we can invest into. There is acceleration, there is deceleration, there is recovery, there is recession, there is boom. So which sectors are good for what kind of economic phase? And we'll also learn about few undiscovered stocks and specifically related to a segment which people don't really talk about. And amidst of all that, we'll also try to uncover different kinds of trading strategies. Most of the time, people have highlighted, the financial consultants, they have highlighted how speculation happens or a long-term investment. But today we are going to discuss about different kinds of strategies, pair trades. We are going to discuss about seasonality patterns. We are going to discuss about 80-20 strategy. We are going to talk about BTST, buy today, sell tomorrow strategies. A lot of stuff. So please, like always, like yesterday, a day before we did this, whatever questions you have in mind, keep writing on the chat section. And I'll try to answer once we are done with this session. I'll try to answer as many questions as I can. And finally, we'll also send you this presentation, what I'm about to do, along with the presentation which we have done the day before. So once again, welcome everyone. I'll just begin the session. So today you also get to see the live platform and the live pricing. And I'm going to give you a quick overview how to take trades, how to take advantage of the falling prices, something which is really important and great concept. And you can easily understand this. So I'll keep switching from my presentation to my web platform, and we'll try to do it in a much smoother way. Just let me set things here. Okay, great. So I'll keep it. Perfect. So we named this session Navigating in Volatile Markets. Volatility is evident. Volatility is what we are always going to witness in not just in the coming few days or in the coming few months. Volatility is something which has become a part of this whole investment era. Maybe 10 years ago, 15 years ago, the fluctuations in the prices were not as big as it used to be. Now I go for a shower, I come back and I see gold has moved $60. What's the reason? It's just morning, but there is no specific reason. It has just moved $50 to $60 while I was inside. And this is what makes us think that fluctuations in the prices have really gone completely out of the ground, because gold, which needed a very solid reason to move $40, $50, perhaps a central bank statement or a stimulus announcement. I still remember back in 2012, Ben Bernanke was the Fed chairperson. He announced financial aid and printing of more dollars into the economy. And we saw gold prices moving up by $40 on that day, and it was a big thing. But now it seems across like a very normal activity. And all you can do is, oh, $60, I could have been on the other side of it. So today we'll try to understand how to navigate during these volatile markets. And the most important part is going to be using market neutral strategies. And we are going to take examples of these market neutral strategies. And before that, let's try to understand the very foundation of these strategies, which is called margin trading. Now, margin trading or leverage-based trading have multiple meanings, but everything ends at one point, and that is risk. One thing which you need to understand about leverage-based trading or leverage-based investment is the quantity of risk which you are taking, because only in this kind of investment you have the potential to make big money, but also to lose big money. Our focus is not on, okay, what happens if you make big money? Everybody's sorted about that. Everybody has planned about that. If I make good profit, I'm going to do what I'm going to do. Investments, education, travel, house, real estate, anything. But what happens when you lose this big money? So the idea of this session, the focus of this entire session is on understanding how to minimize your risk, how to minimize your loss, identifying strategies which can help you to control your portfolio during such volatile sessions. So margin trading, method of trading assets using funds provided by a third party. So I'm going to make it very simple for you. The chart which you see right now, let me just, okay. So the chart which you see right now over here, it's or the picture what you see right now, it says deposit buying power. To sum up in a very simple way, you can buy more than your actual deposit in any trading account. That's how all the trading accounts work. Derivative-based trading account works. If you have put $50,000, you can buy something worth $5 million. If you have put $100,000, you can buy something worth 10 million, 20 million. Depends on how much risk appetite you have, or how much aggressive or conservative or moderate risk taker you are. So we always divide investors into three kind of categories. One, we call them cautious or conservative investors. Second is balanced or moderate risk-taking investors. Third is obviously adventurous or aggressive investors. The third kind of investors are the one who are aggressive in risk-taking, and we will try to avoid that bit and all be more on the conservative and the cautious side, and try to understand that how we can do this. Now, as I said, I will be switching directly from margin trading and leverage. I will show you how to do this on a live platform. And that's why I'm sharing with you the live platform currently. Now, this platform, what you see, this is provided by CMC Markets. And CMC Markets is a company which is based in Australia, London, and different parts of the world. And this is the platform through which you can invest, you can buy and sell, you can trade, speculate, strategize, you can see prices real time of what is going on in the market. This is obviously a demo account, but one thing which is, so the prices which you see will live, but the money which you will see is definitely a demo account, a dummy money. So do not get excited if I'm making a profit here, and do not get worried if I'm making a loss here. The purpose of the demo account is just to make you understand that how buying and selling works in financial markets. Because so many people have asked it in the past that is it necessary for me to give the control of the trading account to a fund manager and let him do it? Because it's not. It's definitely not necessary that you hire a fund manager and let him do a buy and sell on his behalf. This is no rocket science. This is one of those things which you can do it yourself. And I'm talking about the execution part. It is always good to have a second opinion from a financial consultant. I'm not talking about a complete DIY phase. I'm talking about that you should know how to buy and sell. You should know at what price, how much profit you will book, how much an average commodity or a currency moves. So it gives you a clear idea of what to expect when you take a trade, right? So when you are taking a second opinion, all you are taking is a direction that I think it's a buy. What do you think? And the consultant can give you a market-based opinion that this is what it feels like, and then you can go ahead and take a decision. The pilot of this plane has to be you. There could be a co-pilot who can assist you, but you are the main controller. You have the steering in your own hand. And that's the idea of this session, to make you independent enough to take your own investment decisions and understand how to do this. Now, I will very quickly tell you what are the asset class which are available, because sometimes when people say trading, leverage, they always think it's Forex. Forex, guys, is just a one asset class of this big investment arena. So when you see from the beginning, we are talking about commodities. You click on commodities and you will see different kinds of commodities here. I'm talking about agricultural commodity like rice, wheat, sugar, coffee, cocoa, orange juice. Energy-based commodities, I'm talking about oil, crude oil, Brent, West Texas. There has been a significant amount of increase in oil prices since yesterday till now. And OPEC Plus have decided to extend the output cuts over the next year. So we have seen oil prices also jumping up. We will look into these charts and try to understand as well. Please keep writing your questions if you face any confusion in this. Then, so when you look at energy-based commodities, you can also see oil, Brent oil, US oil, gasoline, heating oil, low sulfur. So all these products, there are investors who are not only sometimes trading it on daily basis, sometimes they just buy and keep it, like natural gas during winters or gasoline prices during winters. Whenever there's a fluctuation in the demand, whenever there's a fluctuation in the prices, we always see a lot of movement in these things. So great, I have questions coming in, Mr. English. I'll be answering these questions once this session is over. So till then, please keep writing these more and more questions, and I'll be able to answer those. Okay. Now, apart from this, we have industrial metals as commodities like copper. We have precious metals, something which is traded a lot, something which people invest into a lot, and it kind of gets maximum attention. So I'm talking about gold, which is a very, of course, highly speculative asset class, but is also being given a status of a safe haven. Now, this word safe haven, you will hear many times, and safe haven itself means an asset class is a safe haven if it retains its value during recession, during any kind of uncertainty. And gold has this reputation of being a safe haven because when the times are uncertain, a lot of investors, they choose gold over equities. So maybe over a short period of time, you might see that gold and stocks, they're moving in the same direction. But then when there have been real situations like pandemics or situations like trade wars or Brexit, you have seen stocks going down, but gold prices moving higher. So gold, remember this, is a safe haven asset class, and you can always see more investments getting into gold during times of uncertainty. So this sums up your commodities. I will also help you to make a list for yourself which are the highly traded financial instruments, highly invested financial instruments. And I will also provide you a platform on request if you need one, just a demo account, so that you can keep a check of that particular list on real-time basis, and that will remain active as long as you want. So this is your commodities. Second asset class is cryptocurrencies. Cryptocurrencies involves Bitcoin and other cryptos. My faith in cryptos is relatively less when it comes to as a investment asset class. So it's very speculative. I would suggest anybody who has a specific interest in crypto, do write up a question and I'll be able to answer it. But until then, we're not going to spend more time in cryptocurrencies because there is a lot of speculation, a lot of risk in it. And I would personally not suggest anyone to exhaust all your savings and invest into cryptocurrencies because it's still a very high risk area and a very high risk asset. Moving on to one of the most volatile asset classes as well, which is called currencies, Forex. Forex by far is the largest, most volume generated. Every day around $6.5 trillion of transactions happen in Forex market. And I'm talking about day-on-day basis. So this is an amazing volume which is generated. And there are a lot of currency pairs which are traded among these. There is euro, pound, Australian dollar, Turkish lira, dollar, yen. So I will also tell you which are the most tradable currencies which you can make in your watch list and track them on daily basis. Moved on to ETFs. Now, there are a few asset classes which we can focus on, like indices, ETFs, share baskets, and shares. And rest we can leave on for later thing. But I will try. Most of our strategies, most of the strategies of investments or trading is around these asset classes. Commodities, currencies, then we'll directly jump on to shares. If you see this second last option here, this is second last, which is shares. And when you click on shares, as we know, so just to give you a refresher, shares, when I'm buying shares of a company, I'm actually investing money into that company. And I'm buying, say, 100 shares at a price of $10. So I'm investing $1,000 into any business. As everybody knows that if you buy a share, there are two kinds of possible income you can generate. One is the capital gain, which is the increase in the share price. So if I bought Apple shares at 110, and if it goes to 120, I make a capital gain over my investment. Another is dividend. Dividend is a share out of a company's profit. If you're holding 1,000 shares and Coca-Cola declared 87 cents of dividend, so you receive $870. Dividend by US companies are generally given every quarter. So 4 times in a year, if you buy a stock on January 1st, you can receive dividend till December. It will be a complete cycle, which will be a whole yearly cycle of dividend. So you can do that as well. There are a lot of stocks and strategies around that as well. And within this platform, you can look into different countries, which you can filter out. So let's say I'm going to put US here. And the best part about product library is that you can go on subtype and find out which sector you are interested in. Could be pharmaceutical, could be property, telecommunication, could be financial services, could be commercial services. So let's say if I select information technology, IT. So I'll be able to see all these companies IT based. And this is the percentage change of those stocks today. So when you click on it, you'll be able to see the highest declining sector, highest declining shares or companies in the IT sector. So Datadog is down by 13.5% today. The lowest is 79, the highest is 85. So you can see these things right in your product library right here. This is the lowest, this is the highest, This is the percentage change today as compared to yesterday. Today, the stock prices have fallen down by 13%, and this is the current price. So by the same token, you can again change it, and you can see the maximum gainers, the highest gainers in the IT sector today, which companies have shown a great amount of growth in this. We also have, so one question is asked here, Mr. Sumit, that do you have Sensex or Nifty or Indian shares? So we have Indian shares in the form of ADRs, which are listed in US market as well. So for example, if you write Infosys here, you can see Infosys Technologies. This is a US ADR, Indian company, but also listed in US stock exchange. So we have companies like HDFC, Infosys, Wipro, Reliance, Tata, companies like this. We also have Nifty index in dollar terms. So that is something which, as a derivative, you get the benefit. I will select index as an asset class, and I'll show you what kind of indices we have. But since you asked about Sensex, we have Nifty or India 50, what we call it, in future contracts, and you can trade that in dollar terms. So that is something which you can also look forward to. So right now we are looking at IT-based companies. One thing also which you can find out from this product library, and this is something which is really great, and it helps you to understand a global perspective. I'm going to edit this table. Now, this is the overall complete product library, and this is the highest. Today, a company called 5 Prime Therapeutics have gained 240% increase as we are talking. So lowest is $17.50, highest is $23, and right now it is going on around $18. So since yesterday till now, the stock has moved around 240%. Now, when I edit this product library, what you need to do is look at the performance 3 months, 6 months, and last 1 year, just to understand and take the feel of how markets have reacted. So you will be surprised to know. Look at stocks like Caesars Entertainment Corp. Why it gets my attention? It gets my attention because in last 3 months, the stock has gone up by 213%. However, had you invested in this company 1 year ago, you will still be in a loss of 3.5%. Right? Similarly, Sorrento Therapeutics. In last 3 months, if you had entered, the stock has gone down by 66%. But in last 1 year, the stock is up by 250%. So there are a lot of companies which have gained great percentage increase in last 3 months. Look at Fever International. If some of you are here today who were in my previous session also, I discussed about Fever. Fever is an online marketplace for the freelancers. If you need, so I gave you an example of my CEO's birthday. When it was last year, when it was his birthday, we hired somebody to sing happy birthday in opera style. And I easily got it from Fever International because there are a lot of freelancers advertising themselves and their work. Look at this stock. In last 3 months, it has gone up by 27%. In last 6 months, the stock went up by 170%. In last 1 year, the stock has gone up by 520%. As you can see, in last 6 months, the stock is up by 170%. And last 6 months were the months of the pandemic, lockdown, post-lockdown. So during this crucial time, we have seen this company gaining around 170%. So that's what the product library can actually help you to understand, that which are the sectors which are gaining momentum. Apart from, obviously, this is something which you can always talk to the consultants and look into that factor as well. I have one more question. If you trade Indian shares, okay. So this is a quick question, so I'm just going to address it. If you trade in Indian shares listed, are we subject to capital gain tax in India? So if you are trading in ADRs over here, because these are just derivatives, so you don't have to pay any capital gain tax over here. So if you're buying Infosys in dollar terms over here, and if the stock goes up and you make a profit, then you are not liable for any capital gain tax, whether it is HDFC, Reliance. Because what I'm showing you right now, these are derivatives, these are CFDs. So you do not have any capital gain tax liability. If you were doing this from India in Indian stock in rupees from an Indian broker, then of course you'll be liable given your status. But over here, if you're buying ADR and hold on to it and get a capital gain, then you are not liable for any capital gain tax over it. So this is shares. Now, few unique things which we have come up with is something called share baskets. I'm sure this community is aware about the concept of mutual fund. All we earlier used to know about mutual fund. It's a fund. It's a basket of a number of asset classes. Share basket is exactly on a similar concept, but what we have done this time, we are giving you themes to understand this. So let's say you want to buy a renewable energy basket. Now, what do you get in a renewable energy basket? You get all the companies which are into renewable energy clubbed together in this one basket, and the value of this basket goes up and down on the basis of the performance of all those companies which are into this particular basket. Now, if you can see in last few months, last 3 months, this basket has gone up by 34%. In last 6 months, it has gone up by 88%. In last 1 year, the renewable basket has gone up by 126%. And during the same tenure, we have seen oil prices actually going down. So the fuel is actually cheaper than the renewable energy, but still we have seen a great bounce in the renewable energy stocks and the renewable energy baskets. I will also quickly show you this by a graphical representation, quickly showing you a chart of this. Let's just go back during the time of the pandemic fall. So as you can see that a pandemic fall happened over here. This is the time when pandemic fall happened, and this was the price. Let me just increase the size of this. Now I hope everybody can see this text. So the basket price, it was around 2,800 during the pandemic fall. And after the pandemic recovery in March, it has gone from 2,900 to 8,800. So you can see this trend from here completely going higher. So from 2,800, and this is renewable energy. Very few people talk about renewable energy, but you see the rate at which it is going higher, right? So like this, you don't get exposed to just one individual company in renewable energy. You get a whole basket. So right now you're diversifying in different companies, but you're still in the same sector. You can level up, you can invest into different baskets like UK bank basket, social media basket. If you go down a bit, you will see there's a 5G basket also. 5G basket, 5G is something which people talk a lot about. Apple came up with iPhone 12 when they talked about 5G basket. They talk about 5G technology. So stocks like Verizon, stocks like Qualcomm, other companies which are investing into 5G can be a part of this basket. And we can definitely send you a list of what kind of stocks are in the basket, so you take your decisions accordingly. So as you can see, today this basket is up by 1%. Today the renewable basket is up by 3.4%. If you see few more baskets like remote lifestyle, or one of the most important baskets I was talking about yesterday, the cyber security solutions, or we were talking about driverless cars. We were also talking about mobile payments. So mobile payments includes MasterCard, Visa, PayPal, these kind of companies. So you don't have to pick one company. You can just invest into this basket, and whatever is the movement happening in an aggregate manner in all those companies, the basket moves on that basis, right? So this can be your intraday, one-day trade with a limited range, or this can be your long-term investments. You have to decide how this works. So these baskets are being created. So this is for your something. This is for you to diversify for. You can see here the oil and gas basket in last 1 year has come down by 40%. In last 6 months, it has come down by almost 10%. In last 3 months, it has gone down by 12%. So today also see it's down right here. So maybe for a long-term perspective, you can look into these things. So we understood shares, we understood commodities, currencies, share baskets. Now, something very important, what we call is indices. Indices in itself, when we talk about indices, we are talking about a stock market index. And a stock market index is like a health indicator for a country. What it does, like what are baskets doing? They club together all the stocks and the value of the basket goes up and down on the basis of how those companies have performed. You can see the index kind of do that on a country basis level. So let me put this alphabetically. For example, Australia 200. What do you think the 200 stands for? Anyone can write over the chat option, I can see. What do you think 200 stands for in Australia? Australia 200 index. Go ahead, guys. Anyone who wants to write on the chat option so I can get an idea of you're able to understand this or not. Just take a wild guess. There are no right or wrong answers over here. In Australia 200, what do you think 200 stands for? Okay. 200 companies listed in Australia, 200 scripts in basket, top 200, absolutely correct. Perfect. Brilliant. So now you know that when I say Australia 200, 200 are the companies, these are Australian companies. And now when I say that the Australia 200 index has been up in last 6 months by 17%, but yearly performance is still down. However, today it is up by 1%. So we know that Australian stock markets are up today. Similarly, Canada 60, Euro 50, France 40, Germany 30, and then there is Germany mid 60 and tech 30. So one country can have more than one stock market index. It depends on the bunch of securities which you are tracking, which means if Germany tech 30 is a separate index from Germany 30, that means that Germany tech 30 is tracking the stocks which are tech stocks of Germany, and these are 30 companies which is being tracked. So there is an index which is created for that also. So if you want to invest into tech stocks of Germany, you can look into this index and have a diversified exposure. Similarly, there is Hong Kong 50, there is Hong Kong China, which has a difference between the mainland China and the other region. So this way you can see all different kinds of indices. Second here. One quick question. The basket consists of one share of each company. No, so there will be, so we can send you a methodology of how these baskets are calculated. There is a nominal value which is being put into these baskets, say 15 million or 20 million, and weightage is given to different companies and different proportions. So that weightage can always be, it can be provided to you, and at what value all these companies are labeled at. So there is the entire map and the entire prospectus of this basket which you can look into. So there is a nominal value assigned to each basket. If it is $20 million, then the shares, how many companies are into that basket, and what is the weightage given to each company. Maybe there are all the stocks which are in the basket have equal weightage, or sometimes there can be more weightage given to higher market value companies. So that is something which can be sent to you very easily. Now, one more thing which you can see, there is Italy 40, Japan 20 to 25. When you go down to US, you see US 30, US NASDAQ, US small cap, and US S&P 500. Now, as I said, one country can have more than one stock market index, and US has 4. And all these 4 are traded a lot. There is always this question that why we are looking at US stock market index a lot, because US has the highest volume and the highest market. Maximum number of bonds are traded in UK. UK is the hub for bonds. But then you will see the highest marketplace for bonds is in US. So US provide the highest volumes, the highest marketplace, a lot of investors. So that's why we are focusing more on US. But obviously there will be a lot of diversification when we actually get into it. So if you can see for US, there is US 30, which is also called, please, I have my diary with me. So if you have a notebook or a diary or a piece of paper, please keep writing these facts. Even if you know it, just write it down. I'm sure a lot of things you already know. I'm just doing a quick review. So we cover each and everything in this span of ours. So US 30 is called Dow Jones. And as now you know that the number 30 stands for 30 top companies. US 30 is tracking the companies which you possibly know the name of. Microsoft, Boeing, Apple, Walmart, Citigroup, Visa, Johnson & Johnson. We are talking about JP Morgan, Goldman Sachs, Morgan Stanley, Caterpillar. So Nike, for example, these are big companies, and 30 of such companies are tracked under US 30, right? Now, today you can see it is down by 0.1%. Not really much movement happened, but over the last 6 months, it has gone up by 20%. Next is one of the most talked index of this year, US NASDAQ 100. NASDAQ is a tech-heavy induced index. There's a lot of technology stocks in NASDAQ. Apple, Microsoft, Facebook, Tesla, Alphabet, Advanced Micro Devices, all other kinds of technology companies. A lot of tech stocks are into NASDAQ. There are pharma as well, sports merchandise, utility as well, but a maximum weightage is in tech stocks. And if you see what I wanted to reflect over here is Dow Jones, which are the largest market cap 30 large blue chip stocks. In last 1 year, they have shown a growth of 6%, while NASDAQ, which is a tech-heavy companies like Amazon, Facebook, Tesla, Google, these companies together and 100 companies, this index has shown a growth of 41%. That means technology outperformed every sector. NASDAQ by far is the most highest return generator in last 1 year, 41% up. If you see the small market value companies of US 2000, small cap 2000, every company is either a large market value or mid market value or a small market value. Small market value company perhaps is a company which is deriving all its profits within America, not globally. So these are your domestic companies which are up by 8%. S&P 500, the global benchmark, which we talked about yesterday, is up around 15%. But NASDAQ especially is up around 40%, and it's a tech heavy. So yesterday I told you also, I shared a portfolio with you which was tilted heavily towards the tech sector. We talked about internet content driven area. We talked about cybercrime solutions. We talked about cloud computing. So that was the reason that why that portfolio was tilted more towards the tech. So now all these indices, you can buy, sell on day basis. You can buy and hold. You can trade, invest for long term. It's up to you how you want to do it. If I include also futures into it, so now I can show you that there is Nifty also as well in this, which is called India 50 by the name right here. So it's a future contract, which means it will expire on a certain expiry, but this is in dollars right now. So you can see this trading in dollars. What you will see in India is it will be in rupees. It's a derivative, so you can get this in dollars. So $12,750 today. If you see the highest and lowest, right here, the lowest is 12,597, highest is 12,824 right here. Okay, somebody just asked me, can one do SIP in indices? So absolutely, we can do SIP in indices, not in the most traditional way, but over here, glad that somebody asked this question. I have opened one idea of which you can see if it is possible. Let me just quickly bring that here. It's right on my email. So I will show you what we were discussing about. And this was an idea from one of our top-most consultancy. He wanted to also share this idea. Yeah. So we are looking at such calculated bit. I've just opened it over here. So there are ETFs in our products as well. Currently, you are looking at a small SIP calculator, which I created on the Excel. And we have kept a very big, almost 10 years of understanding here, that if you're investing for 10 years, because yesterday I talked about the decade, right? I talked about what has happened in the next 10 years after post-US elections. So we kind of created a SIP calculator and backtested the average return of S&P 500 as an index. So forget about the initial investment. If you're putting monthly $1,000 starting, so this is from 2011 to 2020, how the returns have been, right? So had you put $1,000 every month with one-time leverage, 11% return, the future amount which you had will be around $220,000, while the total money invested which you had put was $120,000. So this is something which we are talking about a 10-year of era, where you have put complete $120,000 and your return comes out to be 220. So the total aggregate investor return is around 84%. This you can easily, if you increase say $2,000, increase your leverage from 1 to 2 times. Similar way, you had invested total amount $240,000, future amount $880,000. This is just a quick calculator since we were talking about it. So I thought that perhaps this could be of use, but we can talk more about this. We can plan this out, that how we can do a proper SIP in index. So you will still use the platform to take the trade, but you can do this using a low volatility ETF. So when I say ETF, which will be the last asset class I will discuss over here, very quickly, exchange traded fund. Just like a mutual fund, exchange traded funds are also a kind of fund, but they are trackers, they're index trackers. So a company which has created a mutual fund, there is a tracker which is tracking that mutual fund, and that is called a ETF. Something exchange traded fund which you can buy and sell quickly on exchange whenever you want to. And this have different areas. So, okay. I have 2 questions coming in, whether the increase or decrease in NSE India will impact India 50 index or vice. Yeah, so increase of just how it goes in Indian markets, how NSE moves or how the India 50 goes up and down. It will also affect the derivative which is here. Normally, whenever there's a movement in the Indian market and India 50, the way it moves, even the derivative move also in the similar way. Calculation, explain the leverage factor in SIP calculator. So I'll explain you the leverage when we will do the trade right away. So you will understand how the leverage bit will work, and will definitely understand the leverage. So this is your ETF, okay, last asset class which we are going to discuss. And so over here, what we can see, what is the importance of a fund? What is the impact of an ETF? Let's say you said that, Yogesh, we would like to invest into a bunch of companies which have a history of giving regular dividends and increasing dividends over a long period of time. So I tell you, okay, so we have something called a dividend aristocrat ETF, which means these are the companies, iShares, ProShares, SPDR, the names which you must have heard, and these ETFs are created by them. So these are the trackers. When you see ProShares S&P 500 Dividend Aristocrat ETF, this fund focuses on those companies which have a history of increasing their dividends in last 20-25 years steadily. If you see the chart also, what fascinates me more about these kind of investments, look at this. I'm sure everybody can understand what was here. Definitely the pandemic fall, which we saw. But at the same time, as you can see, not only it has recovered from pandemic, it has gone up and it has broken its resistance completely, and it is trading right here currently. And this particular fund was even going on an uptrend before the pandemic happened, and it went down. So now again, it is back to it. So this is something which you can also invest for a longer period of time, because if you see the volatility here, look at this. The value of this index, the value of this fund is $78 per unit. From 75, it went down right here to 50, 49 or 50, from 75 to 50. And then from 50, it went back to 78. This is a low volatile as compared to if you would see stocks like Boeing. Stocks like Boeing from 350, it went down to 90, right? So the impact of the individual stock which you faced during pandemic, it will be higher as compared to an ETF. So ETF is also a possible form of investment which you can do. Now, coming back to the point, somebody asked about the leverage bit. Now, once you have understood what kind of asset classes we have, let's quickly make a watch list. So I can just put all these asset classes together, and next you just take a picture of this, and then you will be tracking this throughout till you want to. So you click on create new watch list and select here, I'm going to write here ICI demo and press enter. And this is going to be, so just click on this add product. Among commodities, gold traded the most, you've seen the most. So gold is first, followed by silver, right here, followed by gold futures as well. And I will tell you the importance of why we are looking at gold futures also. And then followed by crude oil, both kinds of crude oil. So guys, this is, I'm telling you what investors are currently trading or investing into. So these are some hot products which you can also write it in your notebook and you can keep tracking. So crude oil Brent, crude oil West Texas. Brent is the oil which comes from the North Sea. Saudi, Russia, Europe, they are concerned with Brent oil. It's the benchmark. West Texas is what US Shell is producing. So there are two kinds of oil and both are tradable. You can look into both. And I will even explain you the importance of looking at both the crude oil prices also. Then you can add among from commodities. Okay, there is agro-based commodity. We can look into coffee prices. There are two kinds of coffee, coffee Arabica, which could be your Starbucks coffee, and there could be coffee Robusta, which can also be any coffee shop. Both these coffees are used, followed by currencies, which is Euro USD traded the most. So you look at Euro USD, GBP USD, Pound Sterling, followed by Dollar Yen, one of the most every, and you can add up to your understanding also, and whichever you like. In indices, SPX 500 global benchmark, so you can track that. Definitely look at NASDAQ. And then we can also look at something like FANG Plus. FANG stands for Facebook, Amazon, Apple, Netflix, Google, FANG. So this index not only tracks those companies, a couple of more tech companies. So we have to look at, and then we'll also look at small cap, just so that we know that how the domestic companies in America are doing and what is their importance. And then we can look at some shares like Apple. We can look some shares like Pfizer, which we did yesterday, how they're performing today. We can add some stocks like JP Morgan, or let's say Carnival Corp, which is a cruise liner, which will also be in our topic. And let's say Darden Restaurants, which is a chain of restaurants. So like this, you can always add, of course, Microsoft and other companies, other countries as well. You can put Adidas also, which is German here. So you can, this is Germany stock. I will also add India 50 right here, future contract. And there is India ETF also. So there are funds also which you can look into, like MSCI India Index ETF. So this index will track companies like ICICI, Sun Pharma, all other Indian companies, and this is in dollar terms. So I think this is in dollar terms. Yeah, this is Singapore-based ETF, and this is in USD. So you can also look into this ETF. So we can give you more information about these products. Click a picture of this watch list. Once the session is over, you ask me for a demo account and create this watch list, and you can see on daily basis these real-time prices, because prices are real. The lowest of the day, the highest of the day, at what price this opened, at what price it is closed, what is the percentage change today, how much it is going up, and what is the current price. So this is the importance of having a watch list. Now, very quickly, once you have understood how watch list is prepared, now we will go and understand the concept of margin trading or leverage and how to execute the trade. As you can see, I have a dummy account over here. So I have an equity of $100,000, right? Now, when I have to execute any trade, first thing I need to do is open an order ticket. And when I open the order ticket, how do I open the order ticket? I can either select here, click, and boom, order ticket is open. Or I can click on any flickering prices, buy or sell prices, and right here is the price. So buying price, selling price, gold prices are put into dollar per ounce, which means this 1865 is USD. 1 ounce is, who is going to tell me how much is 1 ounce? Very quickly on the chat option. How much is 1 ounce? Anyone? Okay, 34.03. Anyone else? Anyone else, guys? Anyone else? Okay, perfect. So I'm going to, okay, 31.1. Okay, so yes, so we are talking about in grams. 1 ounce of gold is around 31.1 grams. So those are 34, very, very close. 31.1 is the exact. But yes, you get the idea. So what you're looking here right now is dollar per ounce, which means USD 1865 for 1 ounce. If I put here 1 unit, that means 1 ounce. I press enter, $1865. This is the current price. If I write 10 units or 10 ounces, press enter, $18,000. If I write 100 units or 100 ounces, $186,000. And if I write 1,000 ounces, it shows me 1.86 million. So you keep multiplying by the quantity. Now, my concept, I want to take a trade. Let's say I'm expecting gold prices to go higher, hypothetically. If I have to take a trade and buy gold, what I will do, I will click here, open the order ticket. Now order ticket is open. Next thing, I have to buy. How much I have to buy? I have $100,000, for example. Now I will take a very first example. Let's say I have $100,000. So I'm going to take a trade with 100,000. Somebody asked me, can we see the spreads of each asset you have selected in a column? Absolutely. So where do you see the spread? You can see the spread right here. This small thing here, this is the spread. So when you open the order ticket, you will be able to see that there's a 50 cents difference between the buying and selling price, and that is the spread, right? So now before I execute the order, I have to understand how much quantity I need to do. Now I have $100,000 in my account value. Everybody can see this. So first thing what I'll do, I'll just buy gold with $100,000. So I don't know how much quantity it's going to be. So what I do, I write it in the amount, $100,000. I press enter, and now I can see 53 ounces, 53.6 ounces of gold is available, and I can purchase it. Most importantly, what I need to understand now, I need to understand this, that I have $100,000 in my account. But what did I tell you in margin trading? That in margin trading is a process by which you just have to block a portion or a percentage of the total value of the trade which you are taking. So when you are buying a house here in Dubai, if it is $1 million dirhams, even if you have $1 million dirhams in your bank account, you normally would prefer 20% down payment, rest get it on mortgage, right? But your exposure on the property is full. If you have bought $1 million dirham house, you have a risk of $1 million dirhams. Tomorrow, if the value of that house becomes zero, you have a loss. If it goes up by $1 million, then you have $1 million profit. It is just to purchase that, your own investment is less, rest you get it on mortgage. In a similar example, what you are doing, if you have to buy $100,000 worth of gold, and by the way, these are real-time prices, so you can see them flickering and moving right now. $100,000, you click here, go on product overview, and you will see that gold prices, gold, whenever you have to buy from 1 ounce to 1,000 ounces, margin is 0.5%, which means if I am buying $100,000 worth of gold, I have $100,000 in my bank account. All I have to block is 0.5% of this trade value, which is 500 from my account. So when I click on this order, once again, and I just bought gold cash, 53 ounces at this price, order is done. You can see over here that my account value is 100,314. It will fluctuate depending upon whether I have a profit or loss, right? Now, what also you can see over here is the total margin, 500, is taken from $100,000, and 99,500 is kept here as cash. Whatever money has been taken in terms, so you have a loss of $65 right now. Where do I see the profit and loss? Where is the profit and loss? Next to your watch list, there is account. Account has positions. Positions means the trades which you have placed. So when you click on positions, you can see that I have taken gold, 53 ounces, $100,000 worth gold at price 1866. Margin blocked $500, which is 0.5% of 100,000. A loss we are having at $60 right now. And this is the current buying or the selling price. So this loss is taken from this available balance, and your account value reflects the real-time value of your investment, right? I think I have a question here. So we can see the spreads of each asset. You have selected a column. So leverage is 1:200. Right now, so the current leverage, what you see, the way you see it, 0.5%, that is true. So the leverage which you get in gold is 200, but utilizing your full leverage is very risky. So how you find your leverage? 0.5% margin we block, so 100 divided by 0.5, 200 times is what leverage is there. But then you don't have to take 200 times leverage. 200 times leverage means that if you are buying 100,000, if you have $100,000 in your account, right? If you have $100,000 in your account and you want to buy $20 million worth of gold, or let's say if you are buying $2 million worth of gold, for $2 million worth, 10,000 margin will be used, right? But if you buy, let's say $10 million worth of gold, right here, $100,000 margin will be used. So what happens is, over a period of time, when you increase your quantity, so this is very important, as you can see, margin can also from 0.5 goes to 3% in case you're buying a heavy 10,000 ounces of quantity. So leverage reduces with more and more quantity you buy tiers after tier, right? So it is not exactly 200 times, but yeah, for a retail investor, you can say that this is something which you can look into. Yes, leverage is 200 times. So right now you can see that I'm losing 110, 120. Now, somebody who asked here, taken one standard lot order. So over here, when you take a trade on a real exchange like Chicago Mercantile Exchange, exchange-based trade has a limited quantity, a standard quantity. 100 ounce you have to purchase if you're doing this from exchange-based platforms. But when you're using derivatives or CFDs like CMC Market, IGSEX, and other brokers, you are using a derivative platform, which means quantity is no limit, which means you can buy 10 ounces also, you can buy 50 ounces also, you can buy 100 ounces. Like I have bought 53 ounces here, 53.5. So this is a partial quantity. This is not one lot. If you were doing this exchange standard contract physical way, then it would be 100 ounces standard quantity. You have to buy it. You cannot buy below that. But using these platforms, you can buy not only $100,000 worth gold, but even 10,000 or 20,000 also. Just remember this, there will be no physical delivery of this gold at your doorstep. So you should be able to understand this fact, and there should be no physical delivery. Look, I have bought gold in 1866, and while we are talking, it has come down to 1863. As of now, we can say that we have used leverage facility, we have used margin trading. But if you see it technically, I have $100,000 in my account, and I have purchased gold worth $100,000. Leverage would be if I buy $1 million worth gold, as you can see right now, which is 536 ounces, 0.5% of $1 million, 5,000. I have 99,000 here. So when I click on buy, see what happens. Now I have two trades of gold, 1.1 million, and available equity has reduced because from here margin was utilized to take this particular trade. So I have a $1.1 million worth gold. I still have 94,000, but now I have 589 ounces of gold. First of all, what I'm doing right now is risk. I have taken a very aggressive trade, so please do not try this in your live accounts. Whatever I'm telling you, please do not try this in your live accounts right now. This is just for your understanding. I'm going to take some very aggressive and risky trades to show you the harmful effects of leverage. So you do not end up taking a very high leverage, okay? So right now I've taken $1 million worth gold, and you can see your loss exceeding around $700, $800, $600. This, if it starts going up, you might see a bigger profit also, but then losses are also higher, and that's what our area of focus is on. So this is one thing. put a pin to it. Leverage and margin. What is leverage trading? Leverage trading means whatever you buy, you don't have to block the full value of the trade. You just have to give a small percentage from your account value. And if there is a profit and you close it in profit, margin still comes back. Profit gets booked, so profit also comes. If there is a loss, then money is taken from your account, whatever the loss money is, but margin still comes back to your account. Margin money is just the money which is held as long as you have the trade open. When I say open, that means as long as you have the trade in the market, it is not closed or sold, you have it. Now, this is one thing. Second most important thing, what we learned here. Okay, so share, okay, right here. We learned margin trading. When compared to regular trading account, margin allows traders to accept greater sums of capital, allowing them to leverage their position. So what you see in this chart is you deposited 100,000, but you can take a trade. Your buying power is around 1 million and more than that. Of course, given the fact it could be more aggressive and it could be anything. Spread is, so there's a question, is spread standard with all brokerage firms? No, it's not. There are a lot of firms which are giving lower spreads than my company. And there are a lot of firms which are giving higher spreads than my company. It is something which depends broker to broker. What's the maximum leverage you provide for retail category and what is the maximum account size on this platform? So maximum account size can be anything, depends. Leverage, however, for retail clients, it is up to you. If you want high leverage of 500 times, it can be provided to you. If you want 1 to 20 or 1 to 30 times, that can also be provided to you. It is just UK regulations, they allow us to provide leverage only 1:30 to the broker, by the brokers to retail clients. While Australian regulation still allows, till March, they're still allowing more leverage as compared to UK. But after March, Australia will also provide max to max 1:30 times leverage. This is something which all the Australian-based and UK-based brokers have to follow. So we are still awaiting the news on that. Currently, you can say that 1:400 times on different products. Stocks have only 1:30 times or 1:20 times, but commodities and currencies can have 200 to 400 times leverage. Okay, so charge for overnight or open position, that is subjective. I will tell you, Mr. Deepak, about how the overnight charges work. That can be something which can change as respective to the product, right? So we understood what is margin trading. Quickly going next, which is one of the important concepts and the foundation of all these strategies will be based on this. Pair trades, what I will talk about, or short selling, what I will talk about. Short selling is the ideal way to understand that how to take advantage from the falling prices. When we talk about short selling, we are expecting that the price of this commodity or this stock or this currency or the stock index, the price of this will go down, and we try to take advantage by short selling the stock. How do we short sell a stock, or how should we short sell gold or currency or index? Very simple. As you can see in this chart, I'm getting more and more questions. Okay, minimum to start with, what are mode to fund or withdraw fund? Sir, I will answer this question just by the end. If you please stay till there, otherwise you can contact me. It's a very easy process to withdraw. Let me just finish this entire thing and keep writing these questions. Now, short selling, if you can see, the broker, which is CMC at this point of time, what you can do, how you can take advantage of the falling prices. Consider this. I hope everybody can see this. This is my water bottle. Let's say the price of this water bottle is $10. Okay. Now, I did some research and analysis, and I expected that the price of this bottle of water from $10 might go down to $5. This is just my research. Now, I want to take advantage of it, right? So I come to Century, and this is their water bottle. Exactly, this is in their office. So I tell them that, can I borrow this bottle of water? They said, okay, fine, no problem. I borrowed this bottle of water. So this is where I borrowed something from my broker. I borrowed this bottle of water. and went to the market. You can see in my diagram over here, I went to the market and I sold this bottle of water for $10 because that was the market price. Then I waited. When I sold this bottle of water, I got $10 in my hand. I waited for 1 week, 2 weeks, 3 weeks. After 3 weeks, I see that the price of this bottle of water from $10 comes down to 5. Now, the $10 which I had with me when I sold this bottle, I keep it with me. But now when I know that price has gone down to 5, I quickly go buy this bottle of water again at $5 now because that's the current price. So the $10 which I received on selling, I pay 5 out of it. I keep the remaining 5, which is my profit. I come back and give this bottle to Century Financial, whom I borrowed from. What I did here, I borrowed the commodity, sold it at a higher price. When price fell down, I bought it at a cheaper price, kept the price difference with me, and gave the commodity back to the broker. This is what short selling is. You are expecting prices to go down and you want to make profit out of it, you short sell a product. When will you make a loss? You will make a loss if the price of that particular commodity starts going higher. So when you look at this right here, what we see here, we see I have bought gold, but I'm in a loss right now. It's a small loss at this point of time. It got recovered a bit. But let's say now I'm expecting a price of, let's say, Apple stock. Or let's say, let's take it big. Let's say I am expecting US stock market might come down. So I go to my watch list here. I see a demo. I look at S&P 500. It's right here. Right here. And I expect that prices might come down. So what I do this time, I am short selling it. Needless to say, I'm still taking leverage because I already have a position of 1.1 million. So I'm still taking leverage. But as I said, I'm taking a riskier trade over here. So you don't have to replicate this in your live account. This is just for your understanding. Now, what I'm doing over here, I have to take a trade. I saw S&P 500. So this time I'm not going to go for a buy because buy is blue. When I expect that price will go up and I have to book a profit, I will buy. But when I expect that price might come down, I select sell. When I select sell, it is like me giving an indication that I want to borrow S&P 500 from this broker. And let's say 1 unit of S&P 500 is how much? $3,560. 10 units will be 35,000. 100 units will be 356,000. So let's say I want to just short sell 20 units. 20 units equal to $70,000. So how I am selling something which I do not own it, I am borrowing it from the broker. So when I'm selling it, look at carefully what happens. Margin block, obviously, $356 margin needed to take this trade of $70,000. See what happens in account value and margins. I sell this. Now I have sold S&P. Look at this. This becomes orange. This becomes S. So S stands for short sell, B stands for buy. Over here, I'm betting gold prices to go up so I can make profit. But over here, I'm betting S&P prices to go down so I can make a profit, right? So if S&P price goes down, I will make a profit over here. If S&P price goes up, then I will make a loss over here. So this is something which you can look into. Now see what is happening here. What is happening here? If you see, I sold S&P 500 at 3563.02. Right now, the buying price is 3562.25. So it is less than 3563. So I'm making a small green profit over here. And I am short on S&P, which means S&P price falls, I make profit. So imagine what happened during pandemic. There was a lot of people who were short selling it because markets were going down. Even now, if you feel that, oh, second wave might come, and second wave is coming. So we saw a lot of decline before the elections just because of the news of a second wave and stimulus not happening, right? So this is something which you can do. Somebody asked me, is it possible also, how long can the position remain open? What is the time limit? Is closing of position enforced in any case? Absolutely, position can be, the closeout can be enforced if you go way ahead your leverage and the margin is insufficient to carry out on that trade and your loss is getting bigger. So yes, position closeout will be enforced and I'll show you how. Is it possible to put a stop loss in this platform? Absolutely. Without a stop loss, platform would never work. So two things at first, I will tell you, what happens, why the position closes out. For that, I have to take one crazy trade just to probably show you. Let's say in Apple stock, today it's up by 1%. So I'll take, say, can I take $5 million worth Apple shares? Okay, no, $500,000. Okay, $500,000 is $30,000. So I can buy $500,000 worth shares, around 5,000 Apple shares, for which margin needed will be $30,000. So I clicked on buy. Again, guys, heavy, aggressive leverage trade. Please do not try this at home in your live accounts. So right now, what I have done, look at my portfolio value. It is $1.7 million, while my account is just $100,000. So I'm heavily leveraged right now. Should not be taking this trade in my live accounts. But why the position closeout enforces, how it happens. So there are a few different scenarios I'm going to tell you. One thing is, when the price keeps going down, look at this available balance, 61,000, because from 100,000, $36,000 here is being held as a margin. 61,000 is your remaining money, out of which whatever you lose will be taken from this 61,000. Once this 61,000 is in a floating loss and available is zero and starts going negative, that's where you receive a margin call, which is an official notification to tell you that your entire money, most of it is in margin, rest of it you are losing, but your trades are still open and you want to continue hold them. Please add more money and hold these trades. If you do not put more money to hold it, now it's a $1.7 million worth position. Imagine what happens if you lose, if the price goes down, let's say by 10% also. You're losing around 170,000. You just put 100,000, so which means you owe me 70 more. But that's not how the brokers would work. To ensure and understand that there has been a possibility of where investors may lose more than their deposit, all the brokers have kept a liquidation point. Because what happens in the liquidation point, when you click on this circle, it shows you a standard closeout level of 18,250. This is just not a random number, 18,250. Your margin is 36,000, which means when your account value comes to 50% of the margin, all your trades are closed automatically. So this 1.7 million worth position, all the trades will be closed if your account value from 99,000 goes down to $18,000, which means you have lost around $82,000 in this entire 1.7 million position. And the moment your account value reaches 50% of this margin, all your trades are automatically closed. So you will be left with $18,000. That is one reason where, and this process is called liquidation. So this is where the positions are forced close out because you don't have enough money to support the margin requirement. Second, positions are closed forcefully when you're trading in a future contract. Future contract, which means India 50, for example. So if you have bought India 50, let's say November contract, sorry, this is INR USD. India 50 is in the watch list. ICI demo here. Okay, so this is India 50. Okay, now if I buy 10 units of India 50, it's worth $127,000. I bought it right here. But what we didn't see is that this is the future contract with a month, November 2020. I click here, product overview. So I can see that the expiry date of this contract is 26 November, 2 p.m., which means I can keep this trade open till 26 November, 2 p.m. If I do not close my profit or loss till then, it will automatically be closed, whatever it is, profit or loss. But at the same time, because I have not closed it myself and it has been a forced closeout, a new position will open in the next immediate contract, which starts with the same 10 units buy, but obviously your current trade will be closed and the profit or loss, whatever it is, it will be booked. So if in a time of a future contract also, there could be a forced closeout if you don't close your trade till the expiry. About the stop loss. Now, whenever you take any day trade, so currencies, commodities, most of the investors, they are doing day trade in it. Okay, so we have something, obviously most of the platforms will provide you something called a risk management tool, which is called stop loss. A graphical representation of the stop loss can be in this way, that whenever you have taken a buy order, which is B over here, and price went up and then it came down, if you have kept a stop loss order S, so your trade will be closed then and there. So after that, if the price falls further, you avoid that particular loss because you were intelligent enough to keep a stop loss and calculate your risk. So I will also show you in the live platform that how it is done. Okay, somebody asked me, sometimes oil went back in negative for a short time. Was there any opportunity to make that time? Absolutely not. Yes, if you could have short sell it, you would have made a lot of money. I mean, I'm not sure how many of people that time were actually thinking that oil can go negative. Like there were a lot of people. I myself purchased oil when it was $20 and $18, and I know that I have booked losses when it went to 10. So definitely it was not an idea that it will go negative, but if you were short selling that time, definitely you would have made money if you were on the other side of the trade. Yes, of course. So I will show you how we can put a stop loss on this live platform. Now I have taken a trade, for example, let's say India 50, 10 units, and I don't want my loss, or let's take gold position, which I can see here. One of the loss which I have is $500 right here. All I have to do, click on this, put a stop loss that I don't want to lose more than, say, okay, now I'm losing already more on it. Let's take in India 50, or let's take this, we might hit a stop loss also. So I'm putting a limit of $2,000, not more than that, to lose in this. And also if my profit goes to 4,000, I would want to book a profit also. So it gives me a stop loss price, 1861. It gives me a take profit, 1872. Either way, when I modify this, you can see that either my stop loss will get hit or my take profit will get hit. Whichever gets hit first, other will get cancelled automatically. So this is, in spite whether you are watching in the market or not, you can completely look at this and you can place a stop loss and take profit. And when you are back, either one of it get hit. You don't have to monitor it every time. So day trades are actually done like this, whether it is currency, commodities, index, gold, anything. Whenever you take a day trade, please keep a stop loss and take profit. This is the biggest. Okay, give me a number on the chat. Tell me how many percentage of people who do day trades out of 100%, how many of you think they make money out of 100%? Give me a number. How many percentage of people do you think they make money in the market out of 100%? Okay, somebody said 5%. Anybody else? Go ahead, guys. Give me a number. Again, no right and wrong answers. Just a perception. Somebody said 50%. Very, very hopeful. Very good. 5%, 0%. So I would slightly disagree with 0% because there are still people making money. So at the end of the day, 1%, you can say 1%, 2%, I wouldn't mind. 0% is like, there. I'm sure there is somebody, even if not me, there is somebody who's making money. So may not be 0%, but yeah, I mean, we are very close. 50% is very optimistic. The thing is, only 5% of people, they are making money in day trades out of this entire volume. Why is that? Please understand that also. It's not that everybody's losing in the market. The reason is they are not putting stop losses. They're not diversifying their position. They are concentrated on only one specific thing. We'll discuss about revenge, like the pitfalls of online trading. So there are a lot of reasons. See, when we talk about diversification, so the risk management, how we do risk management, one is stop loss. I put a stop loss. We'll also see if we get enough time that how to place a stop loss. But another thing is diversification. More than anyone, obviously, I'm sure everyone in this community is aware about the phrase, do not put all your eggs in one basket. When we say it, that simply means that as per our risk appetite, each one of us have an investment pyramid right here, and which goes from a low risk to a high risk. Look at this base of the pyramid. It is all your money put in a savings account, your insurance policies, everything kept in terms of cash. This is the base of your pyramid, which means you should have enough cash, not just for your rainy days, but for your rainy years. Once you have that, once you have things in your savings account, you move on, you start investing into bonds. Yesterday, we were talking about investment grades with good yield, Indian bonds also, Vedanta bond also, with coupons and good yields. So you start investing into something which is slightly high risk as compared to your money kept in a bank, slightly riskier than that, but also there is a certain amount of return which increases. Bonds have different yields. So it could be government bonds, it could be corporate bonds. When you have that sorted, you have something fixed coming, you move a little further. You start putting money into blue chip, big stocks, real estate, mutual funds, all these things. Obviously, your risk increases more than bonds, but your returns are also expected to go higher. Then you go to the tip of this pyramid, which is speculative market trades, what I'm talking about right now. That's the tip of the market, ladies and gentlemen. So that's why you do not borrow money for trading. You do not exhaust your savings for trading. You can always invest, but you have to understand that speculation and trading and strategies, this is done with a complete awareness of what are the risk and reward. You just don't look at a flyer and take a trade. You have to understand and look at the market expert and financial consultant and talk to him. Okay, I'm going to do this. What is my risk and what is my reward? Second thing, the sectoral correlation which happens, which will be better explained in sectoral investing right here. Now look at the sectoral investing. I have prepared this chart over here where you can see how the economy moves and when it gets moderate and then when it starts coming down and when the growth contracts. So the first thing is the economic growth, the acceleration. Take a picture of this or write it down somewhere. This is sectoral investing, guys. Which sectors you can look into? Consumer discretionary. This is your luxury products, financials, industrials, IT, materials, and real estate. So when the economy is booming in its early phase of its growth, that it's accelerating, you can look into all these things. When it is on a moderate growth, it is still positive, but the growth is moderate, not as high as before. You start looking into IT sector still, communication service. When it starts, when you see the growth rate, it is falling. It is still high, but it has started coming down. You start investing into defensive stocks, consumer staples, the something which you always need, energy stocks, healthcare sectors, materials, utilities. Then during the recession, when the growth contracts, you can look into consumer staples, healthcare, and utilities. And you can see how the other sectors, they underperform during different stages of this. At the same time, to break it down in a neater way, see this. When you see the economy is slowing, you use a defensive strategy because your goal is to reduce the volatility and reduce the risk. What do you have to do? You have to invest in a sector which normally outperforms the market when economy is slowing and has low fluctuation, has low volatility, which means utility stocks like GE, General Electric, which is very segmented into different products, healthcare companies, and consumer staples like Walmart, something which will be used like Coca-Cola, for example. Recession, no recession, people still drinking Coca-Cola. This is your defensive strategy. When you see that the economy is growing, then you go a bit opportunistic. Your goal is to enhance your return. So what do? You start investing into IT companies more because these are the sectors which might outperform, like how NASDAQ did. There was an opportunity. Higher volatility, again, these are again high volatile stocks. So you have to be very careful. The consumer discretionary are the big brands, financial are the big banks, and then IT is your tech. Then there is something called preemptive, where you see that inflation has started rising. Now, a good measure to beat inflation, real estate companies, energy-based companies, again, material-based companies, something which can protect your buying power. So usually outperforms the market when the economy leads to inflation, has ties to the price of raw materials or real assets. So as simple as that, material companies can be your base metal companies also, real estate companies, for example. So this can be your strategies. And apart from that, we can always look into some pair trading strategies. So now I'm back to a point where we'll talk about these trading strategies and how many kinds of trading strategies we can look into. I just showed you buying and selling of instruments. Now, buying and selling is just one small thing. This is just speculation, which anybody can do. You can look different levels. Like for example, I have kept a stop loss right here. Now I can see a small profit in this position. But I did not take this trade with a view. I just took this trade to demonstrate you. So what we understand is speculation might lead to anywhere. I could do a research and analysis. I could get similar results. I may not get similar results. The chances of me making money is what I'm doing right now. I'm making $450, $500 because it's an over leveraged trade. But what we need to understand, what was the topic of this whole idea? Market neutral, navigating among the volatile markets, how we go market neutral, how we understand the market neutral strategies. So that's where the pair trading strategies came up. Okay. Now, because you know about short selling, so you know that if you short sell any instrument, you are expecting the prices to go down so that you can make a profit from the falling prices, right? Now, how the pair works is, if I show you this small demonstration, look at these two stocks. The blue one is, the blue line which you see is Ford. The gray line is General Motors. Now, pair trading, first of all, the pair means two companies with a very close relation. And when I say close relation, which means a very close similarity, you are looking at two companies which are almost similar. So I'm talking about Pepsi, Coke, in this case, General Motors and Ford, MasterCard and Visa, any other pair which you see, which can be used one after another, because these are the companies which MasterCard and Visa, they have the same product, they face the same challenges, same target market, right? So MasterCard and Visa is one pair. Similarly, Ford and GM, Pepsi and Coke, these kind of, even in indices, Dow and Nasdaq, or Dow and S&P, or S&P and Nasdaq, which are tracking the same stocks in one index, could be good pairs. But what is the relevance over here? The relevance is, in pairs, we have seen, we try to backtest the data and we try to understand that, let's say in this case from 2012 till 2017, right here, 5 years, how Ford and GM moved in proportion with each other. So we saw that this is GM movement, just like here, while this is Ford, which is very close. Even the percentage increase and decrease in both the stock is same. Sometimes we see there's a big gap, which means maybe Ford went through a very steady line, but GM went up a little more. So we saw that when GM went up too much, Ford from here just caught up to it, right? And then again, the gap got closed. Again, gap here between the two stocks, and then this gap again gets closed. Gap right here, as you can see, and then look at this gap gets closed. So when this gap occurs too much through a mean reversion strategy, when GM stocks went up by this much and Ford went down due to some reason, we understood that this has been a historical movement. So now this is an opportunity where we can go market neutral. So you short sell General Motor and you buy Ford, because either this will go up too much and will book a profit, or this will come down too much and close this gap, so you book a profit in either. In a pair trade, while one leg is in a loss, other leg anticipates to make more profit than the loss in the other, right? So let's say, because we know that GM and Ford, if they're moving in a similar direction, if Ford starts going up, GM might also start going up. So you're short sell on GM, you might lose money. But that's the concept. The concept is that why you are doing this, you're doing this because you're expecting that even if GM comes down too much and Ford is going up, and let's say GM is going down, then you make profit both ways. But if Ford goes up and GM goes up and this gap gets closed, it gets closed means your profit in Ford is way higher than your loss in the GM. This is how a pair trade would work. This is how a market neutral do work. Now, somebody just asked me, can we do pairing with gold and silver? Absolutely we can, which is called a gold-silver ratio. But let me warn you over here. Gold-silver ratio, it was not in my presentation. So, but since we are talking about it, let me show you what has been a current status and how gold-silver ratios. I'm just literally googling the chart right now, as you can see. Look at this, images. So why this is important right here is because of this reason. So this is a small data from 1975 to 2015. And what you see over here is that gold to silver ratio, which means gold prices divided by silver prices, every time it used to come around 80s, this ratio used to go down. Right here, right? This was back in 2015. So gold silver ratio is actual thing. It is, there are people who are actually trading in gold silver ratios. Now, tell me one thing. Let's go back to the page. Okay, let me remove all this. I'm showing you gold and silver ratio right now. Look at my watch list. Look at the gold prices. And now look at the silver prices. Look at both the prices. Calculate this ratio for me. I just told you what is gold silver ratio, or whatever you think about gold silver ratio. Calculate the ratio of gold and silver prices. Send me over this chat option. Go ahead, guys. It's very good exercise. Use your calculators, although I'm sure talking to a community of chartered accountants, you don't really need a calculator, but go ahead. How do you calculate the gold silver ratio? And tell me what number you're getting. Most of you will get a similar number. My chat option is open. Okay, 77, 77.7, absolutely correct. So 77, right? So most of you will get 77. How we get that? We just divided gold prices by silver. Now, how do you execute a gold silver ratio? So let me close all these trades, book my profits, losses, whatever I have. See me how I close my trades. I just click on this close right here, close my profit, and my margin gets free. So my profit gets booked, margin gets free. Now, when I close all my losses here, my margin gets free, my loss gets booked, margin gets free. Now, no margin. Margin all comes back to my available balance. So in this entire $1.7 million transaction, I lost around $900, right? Because all my margin, which was blocked, came back after I closed the trade. Now I have to take a gold silver ratio trade. How do I take a gold silver ratio trade? I showed you a chart of 2015. Let me show you an updated chart. Gold silver ratio updated. Gold silver ratio updated 2020. And images right here. Can be this one. Ah, okay, perfect. I think this one is better. So we can look at this chart. See, now what you see right now, this is the chart of gold silver ratio. And right here, ratio breaks out 94 level. So this is 2020 March when the pandemic happened. This was the ratio supposed to be. Look at this price, 88, 89 right here. And look at this resistance. When it used to be 86, somewhere around here, it always used to come down. So in March, the gold silver ratio from 86 went to 94. Now, nobody was ready for it. So a lot of investors, they might have made a loss because everybody saw whenever the gold silver ratio is high, they would take a trade where they bet that gold silver ratio is going to come down because that's what the historically we have seen. But this time ratio broke 94. But now when you have calculated, I'm sure everybody calculated gold silver ratio. Now from 94, it has come down to 77, right? So I would not enter into a gold silver ratio trade now. Rather wait for it. If it goes back to 85 or 90 levels, then I will enter. But if I have to enter, how will I enter? When I'm expecting that the ratio will come down, which means when I have a numerator and a denominator, and I'm expecting the ratio to come down, what I have to do, either the numerator price, it should fall, right? Or the denominator, it should go up. So whenever the gold silver ratio, you're expecting it to come down, you short sell gold and you buy silver. Equal value because gold price is $1,864 an ounce, silver is $24 an ounce. So you cannot do it in ounces, you have to do it in value. I have $100,000 here, so I will short sell $50,000 worth gold. I will buy $50,000 worth silver. I sell it here. I buy it here. Now I have a gold silver ratio trade. What is my risk here? My risk is exactly what happened during the pandemic. Why we were expecting that gold prices, because of the ratio, gold price might come down because the ratio is at historic highs. But what happened in pandemic? Gold went even further up, and because of the lockdown, silver is not a safe haven asset. Silver is an industrial metal. So during the lockdown, silver prices started falling while gold prices started moving. So the ratio widened, and that's where you made a loss. So that's why you have to be, of course, taking into consideration that sometimes pair trades might not go in your favor, but obviously things like pandemic, it did affect gold silver ratio trade, but there were a lot of pair trades which actually worked well between crude oil, between gasoline and natural gas. So I'm going to show you a couple of more strategies, guys, before we finish this. See, pair trade is one way to do it. Second thing, also, which you can see here. So let me share with you now a couple of strategies which we were looking into. Okay, let me just see what we have next. So we did pair trades. Okay, there was technical analysis. So before we move on to any technical perspective slightly, we'll just try to understand a few PDFs here which are available. Right here. Okay. So I think this is visible to everyone. Yeah. These are all the strategies which I have to show you. So starting from the first, now I showed you gold and silver is one pair trade, but as of now, we are not taking any flyers on gold and silver because of the fluctuation. Gold is anyways expected to be going higher on the longer term. So whether you can do a pair trade, yes, it is possible, but as of now, it's not normally advised to do it because of the uncertainty in gold. Silver has though caught up with the prices. So why from 94 ratio came down to 77? Because silver actually showed a big rally. We'll see soon this in the chart. Now, another pair which you can take right now is between the renewable energy share basket versus the oil and gas share basket. I showed you share baskets, right? So we are trying to develop pair trading strategies between the baskets. Of course, there are risk and disclaimers kept, but then for what you need to understand is what is the rationale of this. First of all, what you have to do, you have to go long on renewable energy basket, which means you buy the renewable basket and short sell the oil and gas basket. For one simple reason, with Biden coming in, obviously this strategy was made on 19th of October, as you can see the date here. So this strategy was made before the elections, but the idea was that the probability of Biden coming was higher. So we went on with the idea that if you go long, if you buy an energy basket, renewable energy basket and short sell US oil and gas, there is a possibility that renewables might go up, oil and gas might go down. Either way, it could be market neutral and one can outperform another. What is the rationale? Strategy is essentially a play between green sources of energy, that is renewable, and traditional, which is non-renewable sources of energy. The renewables consist of sources like wind, solar, electricity, and water. Non-renewable consists of carbon, fossil fuels, oil, and natural gas. Now, there is the statistics. If we see, and we'll see the statistics, the renewable company shares have outperformed the non-renewable peers over the last 5-year period. US elections predicting blue sweep. Blue sweep means, I told you yesterday, Democratic House, Democratic Senate, Democratic President. I have given a further push to the renewable energy sources. So this was before. Oil and gas shares, on the other hand, continue to suffer from legacy issues of sharp reaction to price movement in oil prices. Now, let me show you over here. Look at this. Now, what is the statistics behind it? Okay, somebody's asking about indicators like Fibonacci. So I'll try to cover Fibonacci's as well. Definitely. I'll just cover the basics, but you can also join a technical analysis session, which we'll have soon. You can just let me know your details and I can connect you. That will only be technical analysis. So we'll also try to cover a few technicals in this session also. So if you see strategy statistics over the last 5 years, average performance of the renewable share basket, it has been 32%, which means if you see the average performance of oil and gas basket, it is negative 8%. Total return side, if we take, so look at this. If you were, so year-on-year average change in both the basket shares, difference is clearly visible. If we take the average returns of total sum of the entire basket stocks, US renewable 191%, US oil and gas negative 49%. So were you, if you were buy on renewable energy in 2015 and short sell oil and gas, you would make 23% return, because oil and gas went down by 16%, you make profit on short selling, and renewable go up by 7%, so you make profit on buy also. So 23% return. In 2016, now see, over here, it went completely different. 2016, if you bought renewable, then you lost 6%. You short sell oil and gas went up by 25%. Now over here, you lost around 31%. But over here, look again, 45% net. Over here, 23% net. Over here, 63 minus 13. So you bought renewable, you made profit on 63%, but you short sell oil and gas, it went up by 13%, you lost 13%, but you still net profit. 2020, 88% up and 50% down. So you're making 130% on this strategy. This is, guys, this is pair trade. So idea of having a pair trade is you took, sometimes you can take to relatable, sometimes you can sometimes you can take these kind of baskets which have some kind of relatable connection. With Biden coming in, more attention to renewables and less attention to the non-renewables. So you can buy one and you can short sell another. This is what the pair trading strategy looks like. Similar way, there are strategies which are done. So this was inter commodity or inter stock strategy in pairs. This is something which you can do intra commodity between gold spot and gold future. This is, again, guys, this is a very old strategy, but right now I'm just trying to give you an example of what else you can do just besides buying and selling speculation. There's a lot of arbitrage opportunity which has occurred between gold spot and future. So look at gold spot and gold December, and let me show you in the platform why I added on my watch list gold spot and gold December. Look, this is gold spot, and this is right here is gold December. Look at the price difference between the spot and the future contract. It is, future is actually $2 cheaper than the spot, which means -2 if we were to call it difference between the future and the spot, right? 63 and 66, -3 difference. Now look at what I'm about to show you. This flyover was made on 16th of July. Spot in December. The difference, look at this, and you can verify this data from Bloomberg, any other sources as well. This is available. The difference, guys, between the future and the spot from July, August, September, last few months, it went as high as $69, which means future was at a premium of $69 and spot was down by 69. So there was a gap of $69 between spot and future. And while we made this strategy, it came down to $29. Right now, what you see, this $28 is -3. So we bet for, because we saw the resistance point that every time it is around these spreads, it comes down, down, down. Obviously, this broke it. This was not expected, but again down, and it reached again, and we expected down, and it came, not only just came down, right now you can see it is -3. So good profit booked on this particular arbitrage strategy, which we call it, because this is done between one commodity, but spot and future. And there are consultants who are looking at this opportunity. Wherever we see a difference between a spot and future is more than its usual, that's where the arbitrage opportunity comes. How do you take a trade in the platform when you have to take? Now, this is a gold and silver cash. Okay. Let's say if I had to take a trade in spot and future. So if I'm see now it has, what has happened? Let me show you, instead of December now, let me show you the February contract. The difference between spot and February is hardly $4. So you can see the premium is at future is at a premium of $4. But this, what you see right now, this was a gap of $60 and $30, right? The immediate contract gap. So normally, if I would take a trade to betting that the gap will reduce, all I have to do is short sell the future and buy the spot. Again, equal quantity or equal value. Let's say 100-ounce buy, or let's say 200-ounce buy and 200-ounce sell. Which means if the gap gets reduced, guys, even if whether the future will come down, because future is at a premium. So in a pair trade, you short sell the asset which has outperformed and buy the asset which has underperformed. So cash is underperforming and this is outperforming. So you short sell future, you buy the spot, and you see that if the spread reduces, either this will come down, so your profit will be booked, or this will go up, your profit will be booked, right? Or both will come down. So profit booked in short selling, profit booked in buying, and that's where the gap reduces. But this trade should only be taken when the gap is high. And obviously, consultants can help you to understand that when is the right time to take the trade. And these opportunities happen. This happened in July. So these kind of opportunities keep coming, and you should be open for arbitrage. But where's the difference? The gap is that this was $27, but this was $70 also. And please let me tell you, historically, it was very difficult to even digest the fact that it has gone up by this much, because look at this. You are looking at a price movement of spot versus futures. We analyzed from 2019 July onwards, and we saw that from 2019 till 2020 highest, and that was a momentary breakout, and you can see why it happened. Look at this month, April 2020, March 2020. That's when the pandemic happened, and we saw a high increase in gold prices, and that's why the spread between the both also got fluctuated. But then it came down, and that's where the strategy took place. So yes, there are both risks which we see, but on normal basis, a market neutral or a pair trading strategy can really help you to explore the areas of investment which you have never seen before. Apart from this, there are a lot of other strategies. There are strategies which are, let me show you strategies like, for example, another pair trade, FANG versus SAS. FANG again is an index, and SA, software as a service, is a basket. The rationale behind this is software as a service. Right here, FANG is an index which is tracking a lot of tech stocks, including Facebook, Apple, Netflix, and Google, and online shopping, streaming, social media, gaming, right? So the rationale is all about you go long on FANG right here. So COVID market crisis has been the most rapid market. This again we created back in July. And I'm telling you, these kind of strategies we are making again and again whenever the time comes in. So there are a lot of strategies which are there. So if you see this returns right here, this is a back-tested data, guys, and you can verify it. As I said, the returns in the table below have been derived by undertaking long positions on software as service index while shorting Chinese tech index of equal exposures. So long positions on software as service while short position on Chinese tech index of equal exposure. Now over here, so FANG plus SAS, this is one versus China tech, right? Both of them are tech and cloud, and Chinese tech are those Chinese companies which you can see. So were you long on these two baskets and short on China tech, you would see in 2015 how the net returns have come. From 2015 to 2020, the aggregate return is around 54% just by using market neutral strategy. And you go long on one, you go short on another. And between 2015 to 2020, Brexit happened, US election happened, pandemic happened, trade war happened. So many things happened, but you are able to generate a positive return by using pairs. So there are a lot of strategies, guys. Again, we'll always have more and more time to discuss this. Last one, which you can see right now, something which is related to seasonality. Seasonality is when we understand a product and we try to understand their seasonality. Look at this. something odd, you will find that from last 10 years, in the month of August, the coffee prices are most of the time in red. It's been just once in 2011 that it has showed positive returns, but most of the time in August, we have seen prices going red. So you can short sell coffee in August, given the historical price movement. Like this, similarly, corn seasonality. These are all seasonality trades where we backtest how these asset classes have performed. In last 5 years, corn has always been negative in August, right? So there are fundamentals also. What is the reason why they go negative? What is, even, for example, orange juice goes positive in November because due to snow, the trees are not able to provide this kind of supply. So the prices move up. So a lot of things. Few things we were talking about, a sector I promised you, which you have not seen or be talking about, is the water index or the water related stocks. So these are some companies which are related to water investments. And guys, water is something which you may not have the focus right now, but it is something which you should definitely look into. So these companies like Veolia Environment, American Water Works Company, Watts Water Technology, Beijing Enterprises, Guggenheim S&P ETF. These all are companies which can help you understand how you can invest into water distribution companies. All of these companies have good compound annual growth rate, a decent amount of earnings year on year. And you want more and more research on this, I'll be able to assist you and provide you. So I'll just quickly take a few questions. I think we are very close to this. So guys, definitely for technical indicators like Fibonacci's, if you need one-on-one sessions, please let us know. I'm ready to take more questions, some of the questions at least, which were in the beginning. I have left it. Let me just check here. Okay, let me just go from the start. Okay, derivative and options trading is more profitable in volatile markets. Less opportunity in US, Canada markets since they're matured as compared to India. But currently NRI is not allowed to do options trading in India. If you want to do options in global markets, I have a platform, Interactive, and you can do options in that. So bonds and options, we can assist you to do in global markets. Indian markets, I can check with someone who, because there is a lot of options trading which happens in India. Okay, maybe due to the NRI standard, if it is not allowed, but I can definitely check on that and inform you. Okay, Sensex and Nifty. Okay, I showed you the Sensex and Nifty and the ADR shares. So that is done. Okay, and so leverage on SIP, leverage on S&P. Now you know the concept of leverage. So if you're putting $1,000 and you are leveraging it over S&P, which means, for example, in your total trading account, there is $500 and you're buying $1,000 worth S&P. So you are 2 times leveraging, right? So that's how the SIP calculator was created. And we can tell you more about the SIP ETF also. So you can always put $10,000 and take a $20,000 position. It will be 2 times. Cost involved that we should be aware of. Cost which can be charged to you can be a brokerage, buying and selling transaction cost, and the spread which is charged by the broker. So you don't have to worry about whenever you open the trading account, it's your right that you should have a sheet of charges which will be charged to you. Mostly there are only 2 kinds of costs, the transaction cost and the spread. The holding cost, it depends whether you're on the buying or the short selling side of it, because now you know about short selling, you will be surprised to know that there are pairs where you are actually receiving the holding cost. So we can always talk about that as well.
Mr. Yogesh, I have 2 questions.
Yes, Mr. John.
One is regarding, since if you are going to have an account here operating US market, and you know, nobody is permanent in this country. One day you need to move to your home country.
Absolutely.
So how that shares you own at this point can be traded if you go back to India?
So there are 2 ways where if these are global stocks we are talking about, and you're using a no derivative platform, like there is Interactive Brokers, which actually allows you to take delivery of the stocks. So that way you already have your portfolio in Interactive Brokers, which you can trade from anywhere and you can handle it from anywhere. With respect to a derivative based platform, yes, there are issues where if you are moving back to your country, it is always better to liquidate all your investments in stocks. And if you are moving back, always a better idea to liquidate your stocks. Because what happens, in India, the leverage-based trading or margin-based trading, you cannot send money, and correct me if I'm wrong, it is difficult to send dollars to leverage-based firms in Australia and UK. There are issues with the central bank, and it's not that easy for Indian residents to send it. So yes, in case if you're moving back to India, the ideal opportunity and the ideal answer is you liquidate your investments and you go. If there is a way, and I'm sure that people can find, because some of my clients have actually found this out, that there are ways that if you can keep your banking active over here as a non-resident, then your transactions are happening still with UAE bank account. So the requirement of the broker is very simple, that the account is opened in UAE. So the banking should be from UAE based account. As long as you are keeping that account open as a non-resident also, you don't really have to worry about anything, because whatever you withdraw or deposit, it will be using a UAE bank account. So that should not be a problem. A couple of my clients have done this with different banks, and you can easily open a non-resident account and keep the banking active. So you don't have to wrap up your investments when you leave.
Is it possible that you can have India dollar-denominated bank accounts to operate rather than UAE bank?
So you can operate, you can create one, but I think there will be a lot of banking issues, because you all are experienced here. You know that when it comes to AML procedures, a lot of brokerage firms in UK and Australia, the compliances over there are very strict. Money coming from India, where the trading account was opened from UAE, it kind of puts it into a difficult situation. So most of the compliance, they don't want to go through that area. So they actually just give an easy way out, that you wrap up and go. Otherwise, just keep your UAE banking open. So that's what we have reached till now so far. We have tried to open the non-resident accounts and let the investors invest through the UAE banks. Anything in India, we normally suggest them that close your trades in stocks and liquidate your positions and transfer your funds.
I have one more question.
Sure.
For derivative-based trading, and suppose, for example, you are buying crude.
Yes.
Okay, and there is a delivery period for any derivative, right? Actual delivery. So how you avoid delivery, or you should mandatorily take delivery?
So in derivatives, the platform which I opened over here, no need to have any delivery. These are just CFDs derivatives. They can be in your account, and you can buy and hold on to it. You can sell it whenever you want to. In Interactive, delivery comes directly in your trading account. So Interactive is a different platform where you can actually take the delivery of physical shares. And JP Morgan is the bank which is associated with Interactive. So your entire funding goes there. So Interactive works exactly like how you are actually buying a physical stock. It can be a no leverage account also. You want to buy stocks, global market stocks, and keep it, you can. But we use derivative platform to take short-term opportunities. You know, like for example, if somebody doesn't want any delivery, you just want, like for example, Alibaba stocks went down to 265. It was a very good opportunity. Somebody has $50,000 in account. He wants to take probably $50,000 worth shares. Just quickly bought Alibaba, and he can hold it for the next 5, 4, 10, 20, 50 days, up to him, as long as he has the margin. So by blocking a small portion, still invested $50,000, and you can hold on as long as you want to. So we normally suggest to clients to have both the accounts. Look at your long-term requirements. If you don't want to take too much risk or too much leverage, you want delivery of the stocks, yes, you can use that. Sometimes you can use CFDs, take short positions, and use share baskets and strategies like this. So you are neatly diversified across different asset classes.
Thank you.
Yeah, but yes, the answer to the question, that derivatives will not have direct equities. Derivatives will not have deliveries. They are just CFDs.
My question is basically not on the equities, on the crude oil, for example, crude.
Yes. So deliveries either way not. We cannot do deliveries. Even if you do it from exchange-based platform, delivery will not be possible, but you can buy and hold on to the position.
How long you can hold on this crude?
As long as, so crude oil is also in future contract. crude oil as a spot product also. Future contracts have monthly expiries. So you even on exchange market, the oil products are in futures only. So they have monthly expiries. If you buy oil by the end of a certain time period, 30 days, that particular trade will be closed and the position will be rolled over to a new contract. So oil contracts, which I showed you on the platform, there are 4 or 5 months going on. So one gets expired, the position rolls over to the next contract. So if you don't want to close a trade, then your position can just keep getting rollover. But there will be a slight loss which you will see because there will be a price difference between different contracts. So we normally tell people that if they want to keep oil long-term invested, they can use oil ETFs. There are a lot of ETFs like United States Oil Fund previously had most of its asset and investments in physical oil. That was before oil went negative. So United States Oil Fund had 99% of its investments into direct oil barrels. So you can buy that ETF and you don't have to invest directly into a commodity. Even now also, the percentage of physical oil investment, it's reduced in that fund. 70% is in direct oil commodity, but 20% is in treasuries, US bonds. So even now also, if you want, you can have United States Oil Fund exposure where you get physical, like exposure to actual oil commodity and 20% into government bonds of US as well. So there are a lot of ETFs we can suggest you. Right? Anyone else, if you have any other question, a few of you asked about how we can take this forward or even more sessions. Just for this particular community, and we have, first of all, a great privilege, again, as I said, to be here. So from our end, till infinite period of time, because we have got this chance to present ourselves, all the members of ICII community from our end get complete assistance and support, whether you're a client or not. Anytime you want any understanding, one-on-one training sessions, platform trainings, webinars, research, portfolios, you get complete access to it, whether or you are or not a client. This is completely for ICII members. You can reach to us on absolutely all the research reports. You want any research reports, email us, email to me, yogesh@century.ae, and just do a reference of the ICII event which we conducted. And whatever the current research going on, we can send it to you, and absolutely with no commitments from your end. This is something which we are doing it for the members. Anyone who wants a personal one-on-one session on technical analysis, I will be available. Reach me out, and we can always do it. Even on Fridays, if you have time, we can do this. So this is complete thing which will continue to the Abu Dhabi chapter from Century Financial throughout. Whether we are the members or whether we are not the members, or whether we are there or not. So this is something which will come across to you free of cost. It is yogesh@century.ae, absolutely. So you want to have any one-on-one sessions, please reach us out and we'll be more than happy.
Let me interrupt here. I mean, Yogesh is very generous and kind enough to say this, but he means business as well. So he wants us to open an account there. So
absolutely up to you. Up to you. That's
Yogesh, can you elaborate a bit on what is the process in terms of opening the account, and what privilege do we have as a ICII member, Abu Dhabi member, in terms of what is the standard and what benefit you're giving to us? If you can elaborate.
So first and foremost, absolutely, sir. First and foremost, the biggest privilege which you get is this. As I said, of course, Neeraj pointed out business bit, and that's very kind of you. But as we have become one community now, so any type of knowledge sharing, absolutely available to you. So this is especially for the ICII members completely. Take your time before you enter into this, because most important bit is for you to understand the risk. That's one privilege which you get definitely as an ICII member. Second thing, to all our clients from here, will be able to provide you consultants who will be able to personally guide you towards like what I'm doing it right now with you, that somebody talked about Fibonacci sessions, for example. You need a Fibonacci session, your consultant can do it for you right there. He can even tell you what are the time frames you should look into, what are the charts. portfolios, investments, anything you need, you can call to your consultant directly. Anytime if you pass by Dubai, I mean, Abu Dhabi and Dubai are now have become two different countries due to PCR tests and everything. But whenever you pass by, always you can visit our office, sit with the consultant, create your own strategies, or just show us your interest areas, what you like, and we can do something about that. Like reopening stocks we talked about, reopening stocks like gaming or airlines, or a lot of portfolios we are creating, which by default will come to you. So the presentation which I've done in the last 2 days, along with the research reports which I showed you right now, all these flyers together, I will compile it once and send it to Mr. John and Mr. Neeraj, and thereby you can get that. Obviously, for much more information, I am available to you. And anything else you guys need, obviously coming from ICI, we are utmost focused and making sure that all your needs are satisfied. Sir.
Yogesh, I have one question here. I mean, as most of the members will be venturing out into US market or global market for the first time, and they will definitely take a baby step towards it.
Yes.
How do you look into that? I mean, if we are coming with a small amount to begin with, is there a same kind of support that you give to a bigger client, or how do you look into that? This is the one.
So I definitely, please go ahead.
And second, what is the minimum amount that we should start with, or what is? Can you just brief on that so that members are aware that how they can take it forward?
Yeah. So definitely, my attempt would always be to give equal attention to everyone. But as good as it looks on books, it's really difficult to do that because I have limited resources. A team is very limited. So what we do is make sure that the frequency of the trade. So if there is a client who's trading more frequent than a client who's trading less frequent, obviously the updates to that person will go higher during the maximum market volatile events. So there are a lot of classifications we do when we provide them the consultants. In terms of equity basis, if it becomes easier to diversify, a benchmark of $10,000 has been kept so that a consultant can be provided, proper research can be provided, and proper attention can also be taken care of. Because what happens is $500 or $1,000 or any amount, which is not a smaller amount, but when it comes to global markets, now you have seen that gold price is $1,800 1 ounce. If you put $2,000 and you buy 10 ounces also, you are heavily leveraged. So we don't want that to happen to the clients. But then we want them to think this as a proper investment. Do not take any higher risk until at least you understand it. So a minimum of $10,000 benchmark has been kept where we can provide you consultants, research, everything. Coming from ICI, if you start anything with $5,000, I may not be able to provide you a consultant, but definitely my research reports and news and market event information will absolutely come to all of you. Yeah.
Okay, that's fair enough. I mean, $5,000 to begin with, and with proper attention to everyone, that's fair enough.
Absolutely. See, so what I'll do is definitely try to research reports and all the new the stats which is going on. Even if you're opening an account with $5,000, that's not a problem. All the research you will get. Consultant, I may have to ask if somebody is trading frequently, then on one-on-one basis, we can always talk about it and we try to understand that if it works. Sometimes what happens, people just want to try and then put more money if they like it. Obviously, that is also a fact. So nothing to worry about. As I said, coming from ICI, it's not really a problem about the amount. I try to give the best of my service. Either way, research and information does not get compromised. It will come to you directly. So nothing to worry about.
Any other questions are there on the chat that you can answer, or something is there?
Okay, cost of account with Century. There's no account opening cost with us. Account opening, account closing cost, no. Light on copy trade of the other traders. Definitely not a good idea. Copy trade, it just allows you to follow what somebody else is doing. I would suggest rather have a second opinion from a consultant. But copy traders, people have different kind of risk. That what copy traders are doing, they are just doing their own trades, but their risk appetite is on their own. So robo advisory and copy trading was famous in the beginning, But now, if you see, people are not doing that. Like it can be a good selling gimmick, but practically it just doesn't solve the purpose. Because if you have put $5,000 and you have given to you're just copying somebody else's trades, the chances of being right is very much equal to the chances of being wrong. So I would rather suggest that strategize, do more and more strategies rather than speculation. So that is something which we can look into. There will be more and more research papers and newsletters which will come across to you. My email is yogesh@century.ae. Somebody just asked for commodity hedge with iron ore. Somebody asked about a paired product. Let me check this out. If I can definitely check the IBKR platform, the interactive platform, and see that if we can pair something with iron for hedging. And definitely I will come up with the margin also. Please talk to me later on, and we will talk about, I will check what we can pair with iron ore and what is the margin and what are the lot sizes. I will definitely get back.
Okay, thank you, Mr.
Right.
Yogesh. In the interest of time, probably we can just conclude the session over here itself.
Absolutely.
Good evening, ladies and gentlemen. It's my privilege to propose a word of thanks for this session. First of all, on behalf of the Managing Committee of ICAI Abu Dhabi chapter, we would like to express our sincere thanks to Mr. Yogesh for the great 2 days.
Thank you so much.
On the global investment opportunities and the impact of US election on the market. It was a great practical and technical insight through the live session in the market. And I'm sure you have covered it very well. And I'm sure there were a lot of takeaways from this session. Thank you, Mr. Yogesh and the Century Finance for collaborating with Abu Dhabi chapter for organizing these 2 days event, and on top of that, extending a continuous support for our members. So thank you so much.
Absolutely. Happy Diwali to all of you. I think this is the last time we're meeting.
Thank you. Happy Diwali.
To all the sponsors for their continuous support. And thank you all the members. Your presence is essential for the success of any event. And thank you for attending this session and making it successful. Wishing you all the investor happy trading and happy earning. Last but not the least, I hope you all have already registered for the upcoming mega event of ICAI Abu Dhabi chapter, 32nd annual international seminar to be held on 19, 20, 21st of November. And we'll have amazing lineup of speakers and 3 days of fully power-packed technical, motivational, and entertainment section. Further, we are also working with a professional firm to make our virtual platform more vibrant and dynamic to enhance the overall experience for this conference. So I would urge each and every one of you to please register and help us to make this event a grand success. So we'll see you all in the upcoming mega event of the chapter. Till then, goodbye and stay safe, and festival greetings to all of you.